Good morning, everyone. Welcome to another episode of the London session on TopstepTV. Bright-eyed and bushy-tailed. It is Wednesday. Let's see what the markets have in store for us. But before we do that, I do have a little request for you guys. If you all know Danielle Oliver, it is her birthday, and we're trying to get the channel, Topstep YouTube channel, to 148,000 subscribers today. We're very close. Obviously, 150 is the ultimate goal, but today, if we can click the subscribe, if we can push the channel over the hump just for Danielle. She works so hard. She is one of the people in the background working super hard to bring you Topstep TV, scheduling, getting everybody in sync, doing what we're supposed to be doing. So, tell your mom, tell your dad, tell your dog, get your cat to subscribe, and let's get the channel to 148,000 subscribers. Share it around, on all of your socials. Every little bit helps, as we have one of the taglines over here in the UK from one of the supermarkets. All right. I know many of you are already subscribed, and in that case, just share it on your socials, right? So just tell your trading buddies, whichever groups you're in. I know that we've grown exponentially, but let's do this for Danielle, right? She's so awesome. Okay, let's have a look at what's going on. Now, last night, we did have some Trump yap, yet again. And that caused copper to go absolutely berserk because of something that he said. He said that he's going to be introducing possible copper tariffs. Now, if I show you the copper chart, I was on at the buzzer just watching Dolby Coach Paul and Coach Jay. And I was trading copper yesterday. So this was my trade here. And this was huge. This was like, I think it was like 300 ticks or something. And then Trump talked about the T word, right? And this happened, right? It just shot up. Literally went completely berserk. It was crazy. This is a move just in these two 30-minute candles of like 700 ticks. Now, copper normally has about 200 to 300 ticks per day. That's kind of, ballpark what we're looking at. And yet this one just skyrocketed it. So I don't know whether I'm going to be trading copper today. I tried to get this combine over the hump yesterday. I obviously did the short copper, did 2 of those, and also did one tiny long ES, which brought me nearly to the end of the combine. So we're going to see whether platinum can maybe get us there today. And we're also going to tackle the question from Paul H. that he asked yesterday, which I think is very important. Okay, let's go back to platinum. So I'm going to drop down to a small time frame here and see what we're working with. So platinum on the large time frame is in a little bit of a speed bump supply. Why do I say speed bump? Is because it's not at any point of a swing extreme. So we don't have swing extreme to work from. So is this just what we call an unclean arrival and this is just going to keep rising? Yeah, quite possibly. But one thing is for sure, because we had some sellers here previously, we might find that this whole trade is going to take time to do what it needs to do. From the volume profile, we can see that we have built quite a bit of volume. So this whole downside move is not exactly leaving too many gaps. Now that can mean that we're just in a range, so we're going to be pinging between 1050 and whatever this is, 960 area for this front month contract at the very least. So yeah, right now, looking a little bit bullish, right? Now, on the 30-minute chart, when we drop down to zoom into intraday time frames, I can see that we've already smashed into the 24-hour average daily range high. Now, that is one of my areas for reversals. When it happens this quickly, and then you have the next candle that is kind of non-committal to the downside. What I look for is for a potential GEX level, which is a gamma exposure area where market makers might find that they need to adjust inventory. So if we can go below GEX 6 with some kind of confidence, so make that microstructure shift to the downside, I might want to change my mind about the longs and actually do an intraday short somewhere down to London value high. If that doesn't happen, and if we find that this is just a liquidity grab, we might dip down below GEX 6 and then pop up. This means that we are still in that bullish territory, in which case I want to look for a continuation move. Something I can see on the profile on my other platform is, let me just clean this up a bit, is a poor high. Now, what's a poor high? It is a profile concept. Now, we're going to have Dalton here, I believe, tomorrow, talking more about profile and telling us more about his new book. He is the grandfather of profile. But basically, whenever you have two TPOs like these ones, let me see if I can maybe make it a little bit more obvious here. Just go to the TPO only mode in expectation of Topstep X getting TPOs someday. We are going to do this for a second just so I can visualize it for you. What am I looking for? I'm looking for TPO size. Where are we at right now? Hold on, let me see. Just give me a second and then you'll see what I mean. TPO size is 0.4, so let's increase that a bit. Let's try 0.7. All right, so this should be a little bit clearer for you guys and girls. So look at this high, right? It says B and C, and there's no further TPOs. So basically, it's kind of like a double top. Now, I know that some people are like, oh, double top, it's a reversal pattern. Not when it happens this quickly, right? Double tops versus poor highs have two meanings. Devil is in the detail, right? When you're looking at price action. So if you've had one run up and then you have a swing away from that area, and then you have another run up to that point on a meaningful time frame, like 5 minutes, 10 minutes, 15 minutes, 30 minutes. So you need to have that swing in between in order to call a double top. If you don't, what you're going to end up with is something called a poor high. Now, what is the implication? Well, one is a reversal pattern, the other one is not. Poor highs tend to be broken intraday, and they tend to give us a little bit of a clue as to where the market might go at some point. Now, we don't have a timeline for that. It could happen now. It could happen in 4 hours, but it is there. It is something to, take note of and go, okay, well, if I ever find a long, maybe I can hold it past the current high, right? Now, how far that gets to after it breaks the poor high, that is a matter of context. You have to have, if you have a very important level up right above it, like at like 1,000, let's say that you have a previous day's value low. You might want to consider making that into your target rather than expecting some crazy momentum through that. But today, as it stands, we actually don't have much in the way until we get to 10:10. And to be, to play devil's advocate, a lot of devil speak today. So on the other side, we have the London value high and the other side of average daily range low, along with GX3, which is a strong gamma exposure level. So we may see a mean reversion down to these areas and then a further reversal for the longs. If that doesn't happen and we start to get into the London value high, there is a chance that we just fall straight through it into a special situation play, which means that these prices are accepted at these levels, and then you can expect a further move down somewhere towards this projected one-day minimum area at 955. So we'll see which one of these plays out. This is the meaning of having flexible bias. So rather than going, I'm long, there's nothing else that can happen, anything can happen. And this is exactly why you want to make sure that you keep your eyes and ears open for any sort of Trump speak, because we are in a market state that I like to refer to as the Trump Yap land. Every time he says something, everything goes nuts. Mention of a T word, crude oil has gotten a bit used to it, but still, we are still seeing, inflation sensitive products reacting a lot to anything that he says. So Paul H. Yesterday asked a very good question. If you personally have a period of drawdown, can you go over your trader rehab to go-to process, please? Now, it really depends on what's causing the drawdown. For most traders who have been doing this for about sort of 4 or 5 years, the drawdown is probably going to be due to your own personal malfunction. You're doing something you're not supposed to be doing. Now, if you get to a point where you're pretty confident in your trades and you know your setups, you know what should happen, but the market state changes, so suddenly, let's say we have crazy volatility at NQ that has been going on for the last 4 or 5 years ever since COVID, but then something happens, let's say we get into a recession, we have a huge drop, and suddenly everything dries down. And at that point, you start noticing that your setups don't have momentum that they used to. You start noticing that everything is slower, that you have a lot more range-bound days that don't have much of a range. Now, that is a market state issue. That would call for either moving away from that product and finding something else, or maybe adjusting your stops to reflect the new volatility, if there's any left. I started trading ES. It was actually one of the first things that they put me on. No, actually, it was fixed income first. I really didn't like that, and they're like, "Oh, let's put you on an equities desk." So they did, and at the time, ES was moving between sort of 16 to 20 ticks in a day. So we're talking like 4 or 5 points for the entire session, and that was it. Compared to the craziness that we have now, that was a quiet period, right? We were going through the quantitative easing program. There was talk of tapering, a lot of talk of tapering. I think it was Bernanke that was the Fed chairman back then. And but tapering just meant that we were slowly kind of trickling upside, but there was no real momentum in it. We would have an odd day, like literally what's happening in crude oil now, right? So we've had an odd day with things go crazy, but for the most part, ES was very quiet. If that's the case, you have to see whether you're okay with that. But if you're a momentum trader, you're probably not going to be okay with that, right? Because it's going to be difficult. So first step would be to figure out which one of these two is causing the drawdown. Is it you or is it the market? Now, for the most part, we have very liquid markets these days. So some of the problems that people might be finding in markets that go absolutely bonkers, like we've had equities going for the last 3 days, is that maybe your stops are not appropriate for the current market condition. So we go to the other side. It doesn't dry up. It's actually increased in volatility. So the stops that you were using before, maybe they require like a 30% expansion, because that is the kind of expansion that we had on the average daily ranges over the last 3 days. Is it here to stay? Nobody knows, right? We don't know whether this is here to stay, whether this is a cause for, the complete change of market state due to the new USA regime, or whether we're just in a bit of an oddball week where there's a lot of Fed speak, there's a lot of Trump speak, and this is going to settle. You don't know that. But all we can do is just go by what is happening right now. And that means, well, for now, in the last 3 years, it's literally, Trump is back in power, right? He's the new president. He's introducing a whole bunch of new stuff that America has never had. How is that going to affect everything? Well, right now it's affecting the volatility of the equities and some of the other things as well. So it's causing increase in volatility. So go back and see which trades didn't work out, and whether you were right on direction or whether you were just completely wrong on direction, right? That's step 2. What kind of quality were your trade setups at? Did you figure out the direction correctly, but maybe your timing was off, or your timing was fine, however you needed a larger stop loss? That's another problem, right? So size of stop loss, and then if all of that market state size of stop loss, volatility increase. If all of that is okay, then you have to wonder whether it's you. Now, this is the toughest part, right? If it is you, if you're just completely malfunctioning, everything is there, everything's the same, but you're not picking levels that are good, maybe the levels are not at the swing extremes. Maybe you're getting involved in the middles of the middle, because let's have a look at this platinum. If I go long here, yes, that might work out, but would a long down here be better? Yeah, absolutely. Why? Because that's the last swing extreme, right? So anytime you're getting involved in sort of this area, it's risky because it's kind of middle of nowhere. And it's a continuation trade for sure. So therefore, all kinds of puzzle pieces have to be in their place in order for this trade to work out. And same thing if you're going to be buying the top. You better have a good reason why you want to buy the top. Now, in this case, if we do go up there, we have a poor high. And that does mean higher probability of markets going higher if we get up there. So a breakout trade could be acceptable. Am I still happy doing breakout trades? Probably not. So if I get smacked on the face doing that, I know that was a poor trade location, and I was counting on momentum that we might have at the time to take it away from the poorer choice of a trade location. But if I'm getting involved in the middles, then crying over it, even if it's a VWAP trade, you go VWAP. I prefer VWAP to line up with something else, outer value edge, average daily range, lower high, GEX. And until that happens, I consider the trade to be sort of 50-50. Anything can happen, right? Now, if you have a higher risk reward, that doesn't have to be a problem because poor choice of trade location, if you have a high risk reward, then it's not a problem. Anything over 2R would be considered a decent risk reward. If you're aiming for high accuracy and then you are in a situation where your accuracy and your 1R targets, which I see a lot of people doing, they're like, I just go for 1-to-1s, which is fine on fast moving products, but it's really not fine if you're trading other things. That's where you start to get into system design issues, because as soon as your accuracy falls below 56%, you're going to start bleeding money very painfully, very slowly. And then that plays with your mind, right? You lose it, your patience goes, your fight or flight response kicks in, and suddenly you start doing stupid things. Now, that is a trader malfunction. That has nothing to do with the market state. It has nothing to do with volatility and everything to do with you not controlling yourself. So once you figure out which one of these two is the problem, you go to step 3, size down. Go to 1 micro. Coach Jack was talking about this yesterday. If you can confidently prove to yourself that you can outperform the market in like ticks and whatever, on 1 micro, then you've got something. I'm never super impressed with people who are like, I made $7,000 in a day in my first day of an XFA. Yeah, you were sizing up like a lunatic because you've got dollars in your eyes. So now you might have a drawdown, payout request, but not after 5 days because it was your first day. And then what we see a lot of people doing, they make $7,000 on the first day, and they're like, I'm the wizard, as I like to say. And then day 2, daily loss limit. So that's $3,000 down. Day 3, daily loss limits. That's another $3,000 down. So your $7,000 is now dwindled to 1,000. And by the time that the payout period arrives, you just don't have enough equity left in there, right? So is that a sustainable thing to do? Probably not. So whenever I see that, I'm like, just get out of my face. Like, I don't even want to talk to you. Because that's like an unsustainable trading practice. You're for sure going to blow your account. Your risk of ruin is sky high. It's like in the thousands of % that you will be blowing your account. If you don't know what risk of ruin is, go to my channel. I did do a risk of ruin thing. So if you go to videos, you will see them. I can even post that. And it's a very good metric to know, right? Maybe I won't make you work for it, but I'll just post it in here because I'm not going to be talking about risk of ruin. Otherwise, we're going to spend the whole day here losing people. It's not super complex. It sounds, wow, risk of ruin, what is that? But it's actually a very, very logical measure. So here it is. I think I've even posted this before many times. So just to give you an idea of what risk of ruin is, go watch my video that I did on my channel quite a long time ago, and then we're going to be more aware of what we're doing. Now, once you figure out that your drawdown is causing you trouble, you need to understand what the drawdown actually is. It is not, oh, the markets are not playing ball. The drawdown is nothing more but it's shaken confidence. So if you are trading from the position of fear and doubt, you won't be profitable. Okay, you can't trade like that because your brain will always be in this like fearful state, and you're always going to be like, oh my God, what am I doing? Oh my God, oh my God. So fear prevents brain development. Do you know that? So if your brain can never create new neural networks because you're in a constant state of fear and fight or flight response, what does that mean? It means that you are not allowing yourself to mature as a trader. So that needs to go. And the only way that that goes, if you remove pressure from yourself by trading with size and go down to 1 micro. So once you're in a drawdown, step 1 is to regain your confidence. It's not, oh, I need to make it all back. No, F the money, okay? It's to regain your confidence. Because you've been doing something, presumably for a while, that has caused a drawdown of 3 days or more. Some people go on weeks, months of drawdown. You know, that is a confidence issue. So to regain that issue, drop down to a micro and see what you're doing wrong. That way you're not going to be digging massive holes for yourself. I also say to limit your screen time to your best trading hour of the day rather than sitting there clicking buttons all day and wasting your mental capital. I'm going to try 1 long platinum here. Instead of doing that, you can actually see with some objectivity what is it that you're doing without the fear of losing money, losing accounts. Just remove that stress from yourself and go back to stats, go back to looking at what the market is actually doing versus what you're doing, what your stops are doing. Do the stops need to be widened? I actually had somebody in my private coaching that, not the VIP, but my personal one, who was asking about the stop sizes, right? Because I said, well, they go whipped out by like a few ticks. And I said, well, you're still using old stop sizes. Have you considered maybe that the stop was a little too tight there because, getting ticked out and then the market going your way? That usually means that your stop sizes are either inappropriately placed, so too high up in the structure, or too low in the structure if you're longing. Or that you just are using stops that are too tight for that particular market environment. I see people obsessed with tight stops. But when something starts moving 30%, like ES and NQ, 30% more than it normally moves, how can you reduce your stop? Like, that's like a complete opposite of what you should be doing. You should be sizing down and increasing your stops. That way, you're going with the volatility of the product, not the other way around. It's just silly. Now, I'm pretty close to getting this over the hump, but notice that I have been trading 2 and 3 lots throughout the whole of this combine. But now that I'm close, I'm actually down to 1 platinum. I'm not, and platinum, 1 platinum is kind of like 5 micros. It's a cheaper product, so it's like $5 a tick. So instead of sizing up, I'm going to size down and try to get the larger trade out of this. Maybe even not today. I don't know whether I'm going to go over the hump today. I'm not expecting it to. I'm not going, yeah, let's rush it. I always say the haste makes waste. So less hastes, more speed, right? When you're that close to passing a combine, size down, slow down, and don't F it up. Trying to keep it PG here, okay? But that's the whole point. I see people doing the opposite. They get to the last few hundred, they're like, I'm going to whack in a 5 lot on NQ and then get up there. And then they lose that. They get themselves into fight or flight response. And then the whole combine is just gone. So let's not do that. Is that an all-time high? In platinum, nowhere near. Nowhere near in platinum. ES. Let me see, ES. No, ES is not. I mean, it's not too far, but it's far enough. So no, these are not all-time highs. Platinum has been up here before, right? So if we look on the weekly chart, we have been up here. We have been much higher, in fact, in the most recent times. May last year, 1,139.5. Let's say 1,140. So no, this is not an all-time high. So we're not doing that. And in fact, if you look on the weekly chart, how this looks, I don't know if there's a way to like hide drawing objects. Yeah, here we go. So if you look at this as some kind of an uptrend that we've already had, like a trend line, we have higher lows, higher lows, higher lows, higher lows, another higher low. This could be just another bounce in that whole uptrend, and this is just a little bit of a sell-off. So if we take that analysis, that this is just a trend line bounce, however you want to look at it, this is not a bad trading location. Is it a good trading location from the intraday time frame? Probably not. There might be better ones, but I want to try it because, you know, so far we've managed to get, we managed to hold GEX. If that changes, obviously I will bail. But at the same time, this is a small $175 trade. So let's get back to the drawings. GEX 6 is what I'm using as my orientation point. They, like I said, they dip below it and they're back above it. So that's the point that I decided to enter this. And now whether there's going to be volume during London or not, again, nobody knows. So far, volume is drying out. So I do need the volume. Now, this is where London, non-specific London products, they do this. They kind of have a bit of a movement and then they die out. And then that movement comes back for the overlap. Now, platinum can trend during London. That's why I've chosen it for this session. But my main product for London is still DAX. It is nothing else. Can I review the NQ? Yes, of course I can. Let's go to this chart. Start on a weekly chart. Massive, massive. There is definitely a range here. These are old levels, so let me just get rid of that. All of it, all of it. I don't know what these blue lines are. I'm always a bit baffled why they're on there. I mean, I must have put them on there, but I don't remember what they are. So definite range, right? So if you take this as a distribution, is there a trend there? Well, not really. It's just distributing in a range, right? If there is a trend, it's obvious. Here it is, right? But as soon as it starts bunching up, things like that, the price action becomes a little bit tricky and it becomes really annoying and people start complaining. Or we have liquidation moves that go from one side to the other in a single day. That's also very problematic for people because they're trying to get in. I've had people in the VIP group that I'm coaching on Topstep, in Topstep Discord, say things like, oh, you know, these are the sort of days we should like the big unwinding days. No, those are the days that investors like because they already have maybe, you know, long puts. You know, they kind of saw that coming. It's like, oh, there's so much risk now. Let's do a protective long put option, right? And then what happens? It goes all the way down. They're not concerned about stops because you don't have stops on options. I mean, you can with multiple options, but generally when you're doing a long put, it's a protective put for the time period that you're looking at. Some people might even be, you know, selling premiums. That's, you know, shorting the option. And creating more income that way. So, you know, there are reasons to be happy about an unwinding day, but as an intraday trader, just know that those are some of the toughest days to weather intraday wise. And for most people, they won't be able to get in on it. and they will be crying over spilled milk because they'll be like, oh my God, look at it. I could have made so much money. It's like, no, you saved money by not trading that. Okay. Just don't worry about outlier days. Those are outlier days. They only happen 8% of the time. Like true, unwinding, relentless, goes one way, doesn't look back sort of day. And in fact, I don't like when I see people trading those days. Unless we had a significant pullback, then you look for another weakness with the trend of the day and the liquidation. That's a better way to look at it, but it requires so much patience, right? Because usually those sorts of moves don't happen until later in the session, and yet everybody wants to be in at the open. Let's go. It's like, great, but that's how you get smacked in the face. And I think yesterday on the house account that they were trying to do something similar, get in on the move early. And then they had the first losing day in 11 days, heartbreaking, but it happens, right? I think the stop was too tight. Again, we need to review the volatility of the product, and we cannot do smaller stops. We need smaller size and larger stops to account for the movement. But hey ho, it's a process, isn't it? So also good TV. So let's keep going. So NQ, definite range. To me, this is a distribution from the large time frame. I would probably not be looking for any early longs until we smash through 20,704, and then look for that liquidity grab back the other way. So I think some bottom pickers will probably be in and around that area. Right now we're sort of in the middle on the weekly chart, so that is not looking that great. Now let's have a look at the daily. What do we have? I will also pull up the options activity, for which you're gonna give me a minute or so. Platinum has defended GEC 6 and it's trying to go back up, so we'll see what happens there. Nothing is decided yet. So yeah, let's see. Daily chart has 2 bounces from the demand area that we created prior. And what I'm talking about is this. Didn't really move that far away from it. Anytime you have the demand coming back very quickly, that limits the risk reward available as a sort of, let's call it intrinsic value of the market structure, right? So if you have a demand, went up here, what is the likelihood that they're going to bounce and where they're going to stop? Oh, look, they kind of stopped right at the edge of the supply. I wonder why that is. Yeah, strange. So yeah, now that we've tested it once, twice, 3 times, if this starts to go into another liquidation move, I would expect them to slice through it and then fish for new longs in and around the bottom of the range. If this entire structure goes and we have a day where we close below it, that would be something more serious. That would be like, okay, we've gone over the demand area that was in force for a while. Is this a bear market then? Maybe. It might be. And in that case, you might want to revisit, let's say inflation goes up. Let's say that we have some recession because, in the coming months, maybe things are going to get quite expensive for people because of all of these tariffs and stuff. That's going to hit businesses, but it's also going to hit the consumer a lot more, right? So we'll see what happens, but it's definitely a precarious chart that is very range bound. Until that breaks, we play the range. Let's have a look at some intraday levels. So I am going to drop down to a 4-hour chart. Obviously, this is an out of hours activity for NQ. Let's overview what happened yesterday. So I'm just going to do my chart over here for reference. I've been watching Jerome too much. So we had a failed auction towards the end of the day. There it was. That was the failed auction. This was the entire initial balance. So huge move during the initial balance. And for me, the obvious move here would be to wait until the structure broke to the upside. And in fact, that is one of the trades that I did in here. On ES, they looked very similar, with ES showing more strength because VWAP on NQ was a little bit higher. ES actually went all the way up to the London low. I look at them as similar products, and I don't like doing NQ trades without looking at ES. I actually look at ES even when I'm trading DAX, purely because sometimes during the regular trading hours it will be dragged by ES. Not always, but in recent sort of 2-3 months, it's been a very lively New York session on DAX. Whole last year it was all a little bit of a meh moment. Like, New York session would come and it would all just dry up. And then come November, it started to liven up a lot more. So yeah. God, we have Chespest doing the cliches of all. I can see, and then mentioning SpongeBob, must be a young person. Because that's, I was already an adult when that was going on. If we haven't bounced that person, let's do that. We do not allow trolls here. And if you're going to be a dick, then you don't deserve to be in here. You can watch, but you cannot participate. So, yeah. Yeah. And yes, I will call you out if you're being rude, and you're being rude and non sequitur. So please take your meds and don't involve us in your mental issues, okay? So platinum going okay. Let's have a look at the options activity. Is there more room for copper to go up? I will deal with that in a second. Let me just see what the NQ options are doing today, because I know that a ton of you trade NQ, you're obsessed with the thing. It's not the only product out there, All right, let me choose a chart here. Let's do this one. NQH. So just give me a minute to drag this on here. All right, so that call from yesterday that never got touched is still at 21,500 ballpark. We do have some GEX levels to the downside. We have GEX 2 at about 21,200. We have GEX 1 at 21,000 evens. And then we have sort of a projected range of the downside move at 20,866. So those are some of the basic options levels. To the upside, they have the upside projected move underneath that area of call strikes and stuff. But is it going to get up there? Maybe. So maybe we should keep it in mind. It's 21,431. But in my opinion, once we get up there, we're in a chop zone. So between 431 and 450, I wouldn't expect that just to slice through it, purely because we have some GEX levels. We have a former put support, but then there's also some calls around there. So there's a whole bunch of stuff that is a little bit of an indecision and a fight between sort of calls and puts. So that might mean that it's going to cause a lot of time to pass before they decide whether they're going to take it higher or whether it's too much interest there, so therefore they're going to stop and reverse yet again. But yeah, 21,500 remains a level of interest. And then to the downside, there is also 0DT put support at 21,250. But right now, that's completely non-reactive. We just kind of went through it as if it's not there. I think during the last hours of yesterday's session, it was sort of reactive, but ultimately today, that doesn't seem to be a relevant level at all. Like anything, if you're deciding whether a level is relevant, you need to see whether the price is reacting to it or not. If it is not reacting to it, then it's like, what are we doing? It's like, who cares, right? But if it is, then you have to take note. Or if it stops somewhere and you don't know why, Go and figure out why. Is there an options level there? Take a look at mentor Q. Is there a value area? Did we exhaust the average daily range? Like, there are a few statistical reasons why something should stop somewhere. And in my experience, it's never random. It's never like, oh yeah, we got up to a level where we have no option strikes, we have nothing, we have no value area, no average daily range, but we just kind of stop there. There's always a reason, right? And if you can find it, it will do a lot for your own confidence so that you know what to look out for next time. Now, levels in NQ that I like to use are usually edges of value, calls and puts, so high interest calls and put levels, and ADR high and low. So 24-hour ADR high and low. Those are levels that are traditionally very reactive, as is VWAP, but VWAP is not always reactive. Like if you're in a mean reversion situation like yesterday, it's going to wag around it and through it and do absolutely nothing, right? Very difficult to trade that. But if you saw the failed auction, you could accord a portion of it up to VWAP and then chill, right? So let's see where the options, where the value areas are in NQ. And I'm going to drag out the New York values because obviously this is out of hours activity. So value high from yesterday is 21,262. Now this won't be updated yet. It's probably going to be quite similar. But JD is the one who updates these levels and he's not awake yet, obviously. So what did I say? 652. That's wrong. 21,000. What am I looking at? 26. Seriously, need some caffeine. I'm trying not to do caffeine today because I noticed that it's like starting to bother me in the morning with like my tummy and stuff. So I'm like, what is going on there? So I need to figure out why. I'm not happy about it. I'm drinking like black tea. 262 actually, if we're gonna nitpick. I'm drinking boring English black tea today. So this is NYSE value high. So RTH, let's say RTH. RTH value high. There we go. And the value low, 21,101. That's a number. So RTH value low. So there could be a chance that we rotate through value, right? That's what happened a couple of days ago, I think. It just kind of smashed through value area. So if you're going to see a bleed, the first setup to look for is a return to value in case we open above value. Of course, this spells the open sentiment. If we are above 21,260, that's going to mean open above. The time to which the mean reversion happens or doesn't happen is what will give you the confidence in either an upside or a downside move. If you see a quick move to the value, that means that the gap is closed. So you have a small gap at the open. They go into mean reversion. If the value high gives way, that means liquidation moves are very likely. But also compare that to ES levels as well, because it would be a nice confluence for you to see what the big boys are doing in a slightly thicker market. So that would be my take on that. All right, let's go back to the messages. So Fizzlet said, is there more room for copper to go? So let's have a look at copper now. I mean, there are some calls up at 450. Not 450, 5 evens. So there is room in the options activities, but after such a big move up late in the day, you could say that this is a late spike. So sometimes you start to accept that. Right now I have no good levels apart from some weekly levels that, could take a couple of days to set up. So if we look at how this looks on a large time frame, It obviously ignored the newly formed bearish engulfing on the weekly chart from last week because of this big move. Where is the next upside? All the way up at 487.85 is the edge of the previously reactive supply, but we have tested it twice already. Is it going to test it 3 times? I mean, to be honest, if we get up there, I wouldn't be surprised to see the 5-0, so 5 evens. So that would be my plan, to basically hit 5.00 and then maybe look for shorts. Otherwise, the introduction of possible copper tariffs, those are huge news, right? That's why we've had this happen. So for now, whenever I see such a large after-hours move as a result of some news that could fundamentally, on a macro side, change the entire pricing of a product, that means stay away until I know what the hell they're doing. And this is why I'm not going to be on copper today. So we'll see how they want to play it. Is this now an increase in volatility? Again, we're going to have 600 ticks in copper now. I don't know. So I want to see. Therefore, I am going to focus in on some other products. Maybe, natural gas or something that might still move a lot, but won't be as vague as some of these products. Yeah, so we'll see. I wouldn't be longing it here, because it's all unclear. On the daily chart, we have another localized supply that was just touched. It's having some reaction, but frankly, I'm worried after that big move. So I don't want to rush into anything. In chaos is opportunity, but chaos also brings blown up accounts, right? So we need to be a little bit more restrained when those moves are happening, because clearly something is changing. But yeah, I'm not looking at the structure here. We have the lows that were established as the bottom of the range at 467.60. Really, until that smashes through, I'm not seeing any kind of single print fade here, because you can take a look at these as single prints, or some people call them FVGs, or whatever you want to call them. I call them single prints because I'm a profile person. So if we start to accept them, sometimes they wick through it. I mean, look at the volume profile. It's so thin, right? It's so thin. So 2 things can happen. We know that at low volume areas, low volume nodes, you can get a move that's either pretty quick through it, or it dips into it, then bounces away. So I know it's like one of those, Dee says it's either going to go up or it's going to go down. But that's not the point here. The point is velocity of that move. You have an expectation that's a flexible bias, but you have one part of the equation, that the move that happens will happen quickly. So it's not about which side it's going to go. It's just the expectation of price velocity. So for me, if it dips down and reverses, that's my cue to jump in on longs. If it dips down and stays in, and then the very next 30-minute candle doesn't start to track right back through it, but it starts to break the structure even more to the downside, that's a single print fade. So that's the difference, right? Hopefully that makes sense. Lucky Cat says, Dee, try oolong. It's really smooth, but not a lot of caffeine. Well, no, I need the caffeine. I just don't. I don't know. Maybe I'm reacting to milk. I've never reacted to milk in my life, but I don't know. Maybe that's changed now. So G-Wiz says, Dee, looking to short gold, 29.37. Momentum is to the downside with big targets on the 4-hour. Your thoughts? Okay, so let's have a look at that. I have been staying away from gold because I think it's too much up and down, up and down. If you look at it on the daily chart, it's like one day it goes up, the next day it goes down, then it's very spiky. The next day it goes up, the next day it goes down, then it's very spiky. So I don't like to see that because I think this is still distributing in a range. Yes, we might be on track for 3K at some point, but they're bloody struggling, aren't they? Like, look at that. Like, we tried all-time high, but just a little bit, and then we go back down. Oh, we broke by 1 tick. Oh, and then we go back down. Like, this is, to me, just distribution. I don't like to see my long-term charts, larger time frame charts, looking this way if I'm going to get involved in something. I tried to go thinking, trend up, we're going to smash through the highs, and then the short happened, and it was such a spiky day. It was horrible. Like, candles were like 100 ticks wide, and I'm like, okay, this is not looking great. So I'm staying away from gold because I think whilst the larger time frame looks like this, it's very difficult to read. If you're shorting it, all the best. I hope it works out for you, but I will warn you that I'm not seeing gold very well. If you are, respect, right? And now on the 4-hour chart, Asia has created a little supply, and that is at the point of a previous daily supply as well. If it starts to fall, it's going to fall. Now let's have a look at some options because I did drag those levels out. We have the call area at 29.15. That's also gamma wall from the 0 DTE options. Further down, we obviously have an intraday swing low, which you can see on this 4-hour chart down here. And where are we opening in relation to the value? Just see the sentiment. So big open below value. Yeah, so we're quite far away from the value area. That always opens up a possibility for mean reversion. Right now, we're kind of in the middle of the 9 EMA on a 30-minute chart and VWAP. I don't like seeing that. That means that the short time frame is kind of in a bit of a precarious rangy area. So this is the 9 EMA, this is VWAP. Usually I like to see price action. If I'm aiming for a trending move, I like to see a price action that is either clearly above both or clearly below both. Whenever it starts to wag inside it, it's always like, ugh. Furthermore, we barely popped outside of the initial balance. The initial balance is sizable, it's about 98 ticks, and it's failed the auction. So that does speak to the failed auction upside, so that means shorts are in play right now. But maybe just watch that 29.15 area for a potential reversal. If that is not defended, then you have a very good chance of it going all the way down to some ADRs, right? And ADRs are located sub 2900. No, actually it's 2902 to be exact. So ADR low, 2902. All the way down. Let me just put in coordinates, it's easy. So that's 24-hour ADR low. Style we're going to change to green, and we're going to change it like it is on the Blotic indicator, like that. So that's kind of a statistical area of potential moves. I'm going to kill the platinum. It failed to take out the poor highs. So I am going to, and obviously we have some shorts in gold as well. That can be a factor. But I'm going to go back to platinum to see whether we can find a short now and to actually break the structure to the downside because we failed to get higher. I am going to use a 2-minute chart here as well. I would like to use range bars, but we don't have them, so look at 100 tick, maybe it'll be smoother. Yeah, so now same thing. If GEX 6 starts to give way, we can try run a short, but not before then. I mean, you can front run it with a very small trade, but platinum doesn't really have micros. Platinum is like $5 a tick and that's it. So looking for the failure of this whole microstructure. So here's your high, but we've made a lower high. So now if we can make a lower low in relation to this microstructure here, that will indicate a market shift change. And then we're looking for at least a reversal to VWAP if that happens. If that doesn't happen and we defend GEX 6 yet again, longs are back in play. But for now, there was just a scratch trade that took me out for some commissions. Even though it was 1 tick, there's some commissions to consider. So yeah, let's still watch this. But yeah, so far, gold does look like it's trying. It's not terribly quick. I expect that to be much faster. Oh, Jay is here. Coach Jay, good morning, Dee. Good morning, Jay. Yes, good morning, good morning. Sorry, I was like talking, so I didn't see your thing. Yeah, very good. Always good to see coaches in here. I know that we are like all kind of like, oh, VIP coaches. We're in like it's a competition, but we're all super supportive of each other. Like I love Jay. Like he's like so cool. Best volume analysis guy that you find in the industry. The way and his ability to explain things. I'm not surprised that he was the winner of the VIP last time, because of the way he explains things. There's no ambiguity. Like that's a talent in its own right. You have a lot of people who are quite skilled at trading, but they can't explain anything for shit, right? You're like, what are you trying to say here, mate? Like, I have no idea. And I've been trading for 18 years, right? Whenever I listen to Jay, even though we have differing styles, we have similar levels and similar outlook of how we get there. But you know, his analysis is sufficiently different from mine in order for me to go, this is cool. And it's endlessly intriguing. You know, he's awesome. So very good to see him here. All right, let's have a look at some more questions. Christopher says, yesterday you mentioned YM doesn't have options activity. Isn't DIA ETF somehow that can be used for gamma exposure levels? So in Mentor Q, you do have YM blind spots that does take in correlated products such as the ETF and actually plops that as a level of interest. Okay, so it's like a very similar. So even though YM itself doesn't have outright options activity, there are ways around it, and Mentor Q are on top of that. So if you're going to do that, then, and if you're part of Mentor Q already, just literally go blind spots on their query bot. So you would go use the code BL levels and then YM ticker, right? And that will be sufficient to drag things on YM as points of interest. And it's very similar. Like I said, it's correlated products. So, you know, I mean, I use ES options converted and sometimes even SPX options converted into DAX. Even though DAX has their own options, but during New York, like they just go by whatever SPX is doing. So it's like, of course I'm going to use that, right? Let's see. Already answered that. What is GEX? It's a gamma exposure level. It's basically levels where market makers might have to engage in order to adjust inventory, meaning to buy more or sell more. Because we've gone past some levels that will screw up their risk management and therefore they have to adjust. Okay, this is why you see levels that are pretty reactive. Mentor Q marks the GEX levels from 1 to 10 in relation of importance. So this is a minor GEX level and we have nothing else around there, so we are kind of wedged between the 24-hour data range high, which, you know, might get broken if we carry on upside, obviously because the poor high. But right now I have to take in market structure. So what do we have? We have failure to reach the high. You know, that's pretty significant. And then if we smash through the low on this 100-tick chart, that's a market structure shift, right? Or microstructure shift even. And that's what you want to look for if you're looking for smaller moves, intraday moves, something that maybe doesn't match to the higher time frame picture. You have to be aware of the lower time frames. I know that some people get completely obsessed with it, and then they never look at the daily and weekly charts and then have blinkers on. So they're just like, it's like trading with a blindfold. It's like, what are you doing? Like, you can't look at a 15-second chart and expect to make good trading decisions when all of the big boys have one intention, and then you're like, oh, why did I lose? Oh, hold on, let me size up to get it back, because, you know, that works. This is sarcasm, in case you haven't figured it out. And Ross says, Dee, what website do you use to see options levels? So I use Mentor Q, just like Anne-Marie, just like Jared J, and a few of us. It simplifies the options chain, so you don't have to look at matrices and stuff and lose your eyes and lose like 2 hours trying to figure out what it is they're trying to do. So they basically collate and aggregate all of that data and simplify it down to another line on the chart. Okay, so that is the point. Steve Witt says, where would you find the deep dive into GEX and get the indicator for NinjaTrader? All on Mentor Q, mate. Okay, just go to their websites. They have webinars. They have everything explained, what the GEX levels are, how to use them, what to look out for. Obviously you have your own strategies, but technically there's a few strategies that they explain. They also give plenty of examples, and obviously nothing is 100%, nothing is foolproof, so you have to have context, but they do provide context to quite a different but deep level. It's like if you've ever done options, then you're probably going to understand it a little bit more of what's happening around the level. Because I've seen some people going, oh, there was a call resistance there, but it didn't reverse from there. It's like, yeah, because it's an equity index and there was more call buying at that level. So it's like, know your markets. Like, what are we doing here? It's not... So context is king, right? It's not just like, oh yeah, just one level. So look, GEX 6 could be a bounce higher, or it could cause me to go into a short. It's a line in the sand. That is flexible bias. It's not just going, I'm going to go long from GEX, I'm going to go long from GEX, and then when it breaks down, it's like, oh no, what happened? What happened? A level broke down. That's what happened. So, I don't know. I mean, with me, I'm a very data-driven person, so I wouldn't be able to trade in a discretionary way. As soon as I started trading, like within the first 3 months, whenever somebody introduced me to moving average crossovers, I could immediately see that's not going to be for me. Because I'm like, well, this is not telling you a story. It's like, it's just telling you, oh, go long. What about the fact that we've stayed in a range? Like the crossover is never going to work in that situation. So you're going to get absolutely slaughtered. So what, we need to match the day to the strategy that we are trying to do, right? That's the whole point. And I also see people having like massive NQ moves that are offering you, hundreds of ticks at a time. And they're like, oh, I just scalped 10 ticks or 10 points on NQ. It's kind of like, pointless to talk about ticks, but it's like 10 points. So you scalped 10 points on a day where it moved like 500. Slow clap. Great. So that to me is like not matching the type of a day, with the strategy that you're using. There's a time for scalping, guys. Range bar markets, I will scalp all day long, no problem. Like those are the days when I will do between sort of 30 and 20 trades because there's nothing else to do. It's like, yeah, you scalp it from one side, then it kind of starts bleeding, then I might rotate all the way to the other. That's already 2 trades. Goes back to the other side, bounces from the session low. Yeah, that's another trade. But if it's a trending move and it's just not looking back, just stay in. Chill, breathe, do yoga nidra, have a beta blocker. I don't know, do something to capture a bit more of that trend for the day. To me, it's just ludicrous that some people are unable to stay in trades for longer than like 3.5 seconds. All right, Steve says, no, I've already done that one. Okay, and I've already done that. All right, we said hello to Coach Jay. Radoslav says, good morning, Dee. Would you please shed some light on how you create a high post for trading DAX and what broker you use to trade it? So I actually have a YOLO account and we have a corporate account as well. So most of it is through AMP Futures, but then Ninja is Ninja, right? So whatever brokers they use underneath, I literally just went through them and that was it. But AMP Futures is, it's pretty cheap when it comes to commissions. I think they probably have the cheapest commissions around. And obviously, if you're going to trade with any sort of size, that becomes a lot more relevant, not to be smacked with commissions. So that's basically it. But when it comes to levels, let's find DAX. Where is it? Here it is. Okay. So this is just a DAX mini. You have DAX full and DAX micro. So full DAX is pretty expensive. It's 25 euros per tick. Now DAX, I pay extra for Eurex, always. It's always going to be an extra fee. Wherever I am, whichever, broker you're getting involved with is the CME, but then in order to trade DAX, you also need Eurex, okay? So don't go signing up for a regular USA account and then going, oh, where's DAX? Like, it's not normally included because it's a different exchange. So you will need to purchase additional data, which may increase your costs per month. So keep that in mind. Now, DAX, I trade very similar to anything else that I trade, right? So I have the same orientation points. On DAX, I do give a little bit more weight to VWAP because it's an equity index, so a lot of people are looking at that too. But it's the same thing. My strongest areas are usually outer edge of value of some sort with exhaustions of range. It doesn't change, guys. It doesn't change, right? So it's always one and the same thing. And with Coach Jay being here as well, he always uses the same levels. It's always like 3-minute opening range. It's always VWAP. It's always anchored VWAP. He doesn't grasshopper around going, oh, today I'm going to use, I don't know, some random level that I've never used before. No, he's always like, this is what I'm using. This is what I'm seeing now. That's called a systematic framework. So likewise, I have outer value edges, average ranges, some support from the volume profile and supply and demand on large time frames, and then just matching options levels around those levels. So I kind of do it the opposite way. Open sentiment, average ranges, options levels. Really similar, right? Today I don't really see anything. This is just going up, up, and up. If we manage to get to the edge of this this low volume area, there is VWAP there as well, and also initial balance high. So that would be my area to look for longs, because I wouldn't be fighting this for London. Once we open New York, this may change because then we have a different open sentiment. And in fact, New York value is a little bit higher up. So VWAP might be at a different point. We might be under it. You know, everything changes with a new session and new players. But as it stands right now, this is just going up. Like, you know, I don't have any interest getting involved at these levels. Like I said, if it goes back to initial balance and bounces from VWAP whilst touching this edge of the volume profile, that would be my first area where I want to be involved. If that fails, if we carry on into liquidation, we'll have a market structure shift. So it may actually have some levels to the downside, right? So going up to a certain area, then selling it there. But for now, this is just very bullish. So until we get a pullback, I really don't have any sort of a good trade here. Right, platinum is still defending that area. So let's try long again, because we haven't managed to change structure. So let's try 35 tick stop again. Are they going to push it? Nobody knows. I'm probably going to do 1,000 as my take profit here. Okay. So let's see if they can actually, all of these buyers that are trying to step in here. There's a big person here who's selling 50 lots. When was that? That was an hour ago, and that's probably what caused this. But now, we've been having people who are trying to buy. They're small players, though. Let's keep it at 2, because I'm not really interested in people that are like me, doing 1 lots. Okay, so yeah, hypos exactly the same way. Keep it in mind it's an equity index, so it will have that upward bias at all times. But yeah, Mohammed says, Topstep, how do we get the GEX indicator? You don't. That's a mental cue thing, so you get the indicator elsewhere, and then you draw it into your Topstep X. All of these things that you see on my chart, they're not native to Topstep X. They do have the value areas when JD wakes up, so he kind of updates them. But we are still waiting for TPOs to come in. We have volume profile, but I use market profile because I prefer it. It's more resolution, and that's how I've been trading for like 13 years, so I'm not going to change that now. Hit that like button for Dee. Yes, thank you, Anne-Marie. She is here as well. Always good to see Anne-Marie here. So hit the like button, hit subscribe. Let's get to 148K, like I said at the beginning of the stream, for Danielle's birthday. Let's see if we can get over that hump. We can do it, right? We certainly have enough eyes on us. Love us or hate us, people watch us. All right, let's see. Niranjan says, how do beta blockers help in trading, and which one do you take? Okay, so I have a chronic illness. Okay, I don't take beta blockers because I'm like, yeah, I'm just gonna trade with a low blood pressure. So beta blocker is used for, like, in that way that I'm joking, but it actually can be used to help you if you're struggling with a fight or flight response. Now, if you already have low blood pressure, it's probably not a good idea to be taking beta blockers. I take them because I have something called the orthostatic intolerance, and my heart rate can be a little bit erratic due to the chronic illness that I have. So I have to take them for an entirely different reason. But if you're struggling with anything like, including ADD, so, that causes focusing issues or over-focusing issues for some people. If you suffer from too much fight or flight response and you're finding that you're always trading from the point of your heart pounding, tunnel vision, your cold sweats, you're getting angry, that is a fight or flight response gone awry, okay? In that situation, the first step might be to try a beta blocker with the help of your doctor, not by yourself, not just self-medicate and then go, oh, Dee told me to take it. Go to the doctor and say you're suffering from anxiety due to, increased stress and pressures at work, that you're trying something extremely stressful, and they will prescribe you a dose appropriate for you, okay? I'm not a doctor. Like I said, I have doctors that take care of me, but it's, it might be a first point of defense against fight or flight after effects. Now, be aware that it's not going to prevent fight or flight, so you will still feel the emotions, but it prevents some of the physical effects, like things like pounding heart, things like sweaty palms. All of that is actually blocked by the effect of a beta blocker. So it's a useful measure if you're really struggling with anxiety over trading. Trading shouldn't be anxiety-ridden. It should be zen. If you're uncomfortable in a trade, you're probably trading with too much size. Not probably. I would say you're definitely trading with too much size. So, yeah. And then taking a beta blocker and then expecting that you're still going to full port it at like 15 NQs at Globix Open, that's not going to help you, right? You're still going to feel anxious. And, you can't medicate yourself to self-discipline. That is a road for disaster. I saw somebody yesterday in chat saying that, oh, yeah, I find that drinking beer helps while I trade. And I'm like, dude, that's like such a slippery slope. Like, I know that I joke during the reversal challenge that I'm going to have shots of vodka and whatnot and whiskey, but I never do, right? It's not like reversal challenge, whoosh, let's go. I don't drink and trade, If I'm going to have a drink, I want to enjoy it, right? I want to be out in a restaurant with my husband or with some very good friends and just having, a little bit of booze with your meal, not to get smashed and wasted, which is seems to be quite a regular occurrence in the UK amongst various cultures and subcultures. But for me, it's been a long time since I actually considered, drink to actually control anything in life, if ever. Like I don't seem to get addicted to anything. You see, this is maybe why I'm able to do trading, not get myself into, some kind of an anxiety mess-ridden activity. It's, it's numbers for me. It's like, okay, well, is this working? Is this not working? Are we breaking through a level? Are we not breaking through a level? And honestly, I really couldn't care less if I'm trading 1 micro or like 50 minis. I just don't care. Like, to me, every trade looks the same. It's all ticks and it's ticks, right? But if you're getting anxious because you're getting into a, 50K XFA and then you're starting on 3 mini NQs, I'm not surprised you're anxious. So step 1 wouldn't be a beta blocker. Step 1 would be size the F down. Okay, maybe you'll be less anxious. You'll be surprised how chilled trading could be if you just traded 3 micros instead of 3 minis. So try that first before you start resorting to drugs. All right, how are we doing? So it's making a move, finally. Come on, Platinum, you can do it. We're all rooting for you. It's just so slow. This is like a very, very slow session. DAX is like shooting up for like 205 ticks. It's already done. And Platinum is like, let's just stay in a range for like 2 hours while Dee does her show. And obviously things will liven up the closer we get to the overlap, but I may not be on the stream then. So I was kind of hoping to get this over the hump today, but maybe we'll do it tomorrow. Maybe I'll just, keep this P&L where it is and try to pass this on stream. Maybe get another combine to work on. So, it's always good to have, even though I have a live account, I want to have some XFAs waiting in the wings. So it's always good to have those. You never know what's going to happen. You can have a freak out. You can actually decide to withdraw all of your money and then start again. Once you have 30 days of payouts, that is entirely possible. So maybe you need money for something. Maybe you've decided to buy a house, deposit on a house. In that case, it's okay to drag everything down and start over, right? And in that case, you need to have some XFAs ready rather than starting new combines all the time. I actually already have an XFA waiting in the wings since the rule change, so just kind of adding to it. Yeah, so Niranjan, I'm not going to tell you which beta blocker I take because again, that is down to the medical professionals, not to me. I'm just a random trader on YouTube. I'm not going to give medical advice. All right, let's see if anybody else is asking. Anne-Marie says, I love how much Dee makes me laugh. I'm glad, yeah. I did grow up with a dad for a comedian, right? He was in a sort of a comedy pop folk band or rock folk band. And then they did like comedy skits in between doing their funny songs. And they were like super famous. So I grew up with all of that, like him just cracking jokes all the time. Right, so we have 12 contracts on the other side. Not the biggest. Like I would like to see somebody actually, really give us an imbalance to one side or the other. Because we're just like middle of the range. Came up to top of the initial balance range. Established a low at 989, just below Gex. Defended Gex 6, and then we're just like... nothing. Come on, move. DAX to the moon. Yeah, I mean, I agree. DAX seems to be very resilient to whatever's going on. Let's have a look at it yesterday. Yesterday I didn't find a good trade on DAX. I was talking to Hoop late in the day. I don't know. I just, every time I looked at it yesterday, first of all, we had this going on. So when I was looking at it in real time, I'm like, okay, yes, we kind of reversed here, but then we're still above VWAP. It's like, what is going on there? Now with DAX, if there's no weakness at VWAP, that is usually a sign that it's going to bounce there. So it's very dangerous to keep going short when you're so close to it. So I actually wait to see whether some weakness is going to happen. And this turned out to be a SEEB, strength inside initial balance setup, pop upside, test the demand area, this one, and then just keep going. And it really wasn't until we actually hit the full average daily range that it reversed. But by then I was already short copper. So I couldn't, didn't want to run 2 trades because I felt like yesterday I was a bit tired and my stupid ankle is still causing me trouble. So yeah, I was like, I can't manage 2 active trades, so I'm just going to stick to copper. And then it went into a reversal just around the time when ES and NQ also reversed, and they were doing a failed auction. So this is where watching ES or whilst you're trading DAX before the New York session can help, because for all intents and purposes, DAX remained inside the initial balance, but ES smashed outside of it and then came back into it, which is a completely different setup. However, if you use that to guide your decisions, you can actually get in some really nice moves on DAX as well. And then I don't think that ES rose this much yesterday, but DAX was just like, yeah, we don't care. We don't care. We're Germans. Let's keep going. Let's keep going. And then today, it's like extension of the initial balance into the sustained auction. Let's go. It's like, what are you doing? Like, give me a chance, man. Just bit of a pullback. Something sensible. One level. That's all I want. So we'll see. Right now I don't have anything on DAX. By the looks of it, this platinum is being really sluggish too. So yeah, bit of a boring start to the Wednesday, to be honest. Trading Nickel says, I've had this issue for weeks. My Topstep X charts and Dome have separated. They don't change together. How do I get the chart and Dome to change and just... Oh, that's... okay, I don't really use this much, but basically you have to connect them through the same link. I did speak to one of the IT developers when they were doing this, like in February 2024. So it's been a while. But yeah, there is a way to set the colors. How do you do that? Let me try. So if I go link... No, they don't do that way anymore. So let's see. There is a way to link them up. Like, I really don't use that feature much. I just have my products here. But let me see what happens if I change this. And then there is a way to set the color. You might be better off asking Dolby this, because I'm just like... I almost never use it, because typically I'm just on one thing and then I change everything, just like we used to back in the day. We didn't have these fancy tools that we have today. It's like, oh, link up the chart, Dome, and your thing. And then sometimes I might want to look at the micro on the Dome, but I still want the time and sales to be on the full, because I don't care what they do in micros, right? All the big boys are playing in the minis. So... for me, linking up charts just doesn't work. But yeah, there is a way to color code things and then to connect them so that when you change one, all of it will change. Blue circle, click on it. Thank you, chat. Here we go. You see? Chat being helpful as always. Okay, so you need to set the exact same color of the Dome and the chart and the time and sales so that it will be the same. So let's say if I connect platinum to it, so now platinum should be orange. Now I hope I don't have anything else as orange. And now if I change orange, and let's say, does this have the chart? Yeah, so let's say if I go to ES, oops. But then where was it? I just had it. Was it there? No, it wasn't. But then, no, I still don't know how to do this. Let me see. Market is open. Yeah, thank you. So let's see now if I maybe connect ES. Oh, here we go. No, that's not it. That's confusing. Okay. Let's maybe try and connect ES in a different color. Now, I remember they used to have this issue. Okay, so now it's connected. Dome and ES are connected. They still have the same issue that they used to. See, I don't find this very intuitive, probably why I don't use it much. When you assign a color to something, in my eyes, that should stay orange, right? But what they still have, like I remember talking to, because I don't know whether you guys know this, but my live account was the first live account on TopstepX. All of the bugs went through my account, okay? Wasn't a comfortable procedure, but hey-ho. I did sign up for it, so I'm just going to put it out there. But, so one thing I said to them is that when we are assigning colors to the linked instruments, that we actually need to have that color to stay. But I see they still have this weird thing where, you want to change color, that's fine. But when you're changing this, it should be some other way to disconnect it from the current thing, rather than me changing to a random, let's say copper, and then both of them now change to orange. But I actually wanted to assign orange to platinum. So I thought it would be a better choice to have it as a sub-menu somewhere. So once you've anchored it to something, it stays there. And then when you change color, it's going to effectively still change. So if you don't want to, if you change the product, it changes the color effectively. But I see that they've still got the same issue here. So yeah, to me, that's not very intuitive. Now if I change this to orange, now that's still slaves to platinum, to copper instead of platinum. And yet somehow platinum changes both now because these two are connected because they're under the same color. So yeah, it's just, I don't know, for me, it's like really hard to get my head around that. It's like, I know what they've done, but I don't know, I just think there's a more intuitive way of doing it. Sorry, I'm nerding out on you. This is like the coder in me going, yeah, that's not right. Yeah. Yeah, I know, GG Trader and Siwa, I know what they've done exactly. I was involved in the process, but I thought they might have had a more elegant solution for that. To me, this is still not intuitive. We should have another way of anchoring colors to whatever you want to do. So to me, this is still like a little bit clunky. We need to sort that out. All right, so I'm going to be sitting here in this platinum, it seems, for a while. But yeah, it's still defended GEX 6, so just need to wait for that poor high to be taken out, and then maybe to get up to 1,000. In the meantime, we do have our Discord, so I'm going to be signing off. Oh no, my visitor session has ended. Why? Okay, so it's just messed up. I can't be bothered with that right now. Right, so check out our Discord. I don't know whether Bruno can pop the links in because Google just literally kicked me out of that page. And we have all the coaches. Anne-Marie is there. We have the strategy lab over there. Coach Jay is there. Coach Hoop is there. Coach Jack is there. Like, we're all on Discord now. So come and join us. There are live classes in Discord happening every day, even if you're not a member of the VIP. We have Coach Ray. We have Coach Hoop. They're all running daily classes over there too. So if you're not in Discord, you really need to check it out. And yeah, that's it from me today. Let's try and get this channel to 148,000 today for Danielle's birthday. Click the like, click subscribe, get your cats to subscribe, get your parrot, all the pets in the house, give them a YouTube account, get them to sign up, and learn how to trade. We've seen Gus, Dobby's cat. He's very frequently involved in our decisions, as is Lacey, and as are my pack, my loud crowd over here of eight crazies. So yeah, enjoy the rest of the broadcast, guys. I'm going to babysit this platinum for a bit, and then maybe find a trade later on my live account as well. I'm not running this one in live as well because I don't think it's a strong enough setup. So it's just a combine trade, taking a punt on a hypothesis that I had that this is going to go higher. And using GEX 6 as my orientation point, along with some initial balance structures. That's it for today. Thank you for joining me. I will see you again tomorrow for another London session, and then I will also drop in for lunchbox trading. And then next week, Dolby is taking over TopstepTV. I will be there probably on Wednesday and Thursday to help Dolby hold down the fort, while the rest of the team is having their Vegas yearly retreat. Until then, have a good trading day. Don't rush, size down, slow down. I will always be preaching that. If you're in a drawdown, size down to 1 micro and give yourself a challenge to see how you will perform on a 1 micro. And if you manage to be profitable, you might find some epiphanies there along the way. I'm Deeyana Angelo, aka Marcus Dee. This has been the London session on TopstepTV. I will see you again tomorrow. In the meantime, take care.